Hi, I'm Jimmy. In this video, we're looking at Apple's stock. This video is part of a new series where we're going to analyze all 7 companies that are technically classified as the Magnificent Seven. They call it the Magnificent Seven because these companies, these 7 companies alone, make up almost a third of the S&P 500. That's actually kind of outrageous because there's 500 companies in the S&P 500. S&P 500 is market cap weighted, and since all of these companies have obscene market caps, they greatly impact what the overall stock market is doing. So we're going to go through each of the companies. Like I said, in this particular video, we're going to start with Apple. And when it comes to analyzing Apple, basically, we're going to look at the business basics. Then we're going to jump into some recent developments, some recent news that has come out about them. Then we're going to try to come up with a fair value for Apple stock. And finally, try to determine, is Apple stock worth buying or selling today? Okay, now let's jump over to the website. By the way, if you'd like to get access to this website, I'll leave a link in the description below. But basically, we're constantly evolving the website, trying to make it easy to analyze companies, value stocks, things along those lines. Link in the description below if you're curious. But for now, let's jump over to Apple's business segments to try to look at where they generate their revenue numbers from. And this one's a bit zoomed out, so we're going to try to zoom in a little bit more just to make it a bit more readable on screen. So we can see that their business segments are broken into 5 main categories. Clearly, the iPhone is their biggest business segment. But I think it's important to recognize that Apple's largely driven, their numbers are largely driven by new products. And not all products are on the same cycle. For example, the iPhone, the most recent iPhone came out in 2023. That was the iPhone 15. Then Mac, well, they announced a new Mac in 2024. The Vision Pro headset that they have, well, that came out. That's in the wearables section. That came out also in 2024. And finally, a new iPad just recently came out. There's a new iPad Pro using the M2 and M4 chips. They're largely pushing towards making the iPads a bit more, let's say, AI friendly. So overall, Apple's in a good position from the products that they're releasing, but we'll see in a second when we look at some of their numbers, their revenue and profit and net income, and not net income, the revenue, profit, free cash flow are largely driven by the success of the individual products. Okay, now let's jump back to the website and have a peek at some of the financials, and then we'll try to come up with the fair value for Apple stock using discounted free cash flow. Once again, we'll zoom in a bit to try to make these numbers a bit more readable. So looking at revenue, we can see clearly, big picture, the trend has been higher for Apple stock. By the way, this is a chart of Apple stock going back the past 10 years. But what I was talking about the individual products, I just think it's important to point out that where, yes, the overall trend is higher, it's not true every single year. In fact, over the past decade, 3 individual times we've seen revenue decline from one year to the next. That's just an important thing to keep in the back of our mind. Okay, now we jump over to net income. Don't forget, net income and profit are the same thing. But just like we saw with revenue, there have been multiple instances over the past 10 years where net income has declined from one year to the next. Now, while that is very true, I don't want us to think that that means that Apple is, let's say, volatile. Big picture, their trend is still higher and it is still significantly higher. But I'm bringing it up because as I've been researching this company, I began to realize that if we own Apple stock, by the way, I personally own Apple stock. We'll touch on that in a second. But if we were to own Apple stock and we're considering buying Apple stock, we might look at it and perhaps get nervous about the fact that revenue declined last year, profit declined last year. And I don't think that's really something we should be overly concerned about. Big picture, the trend is still higher. And if they do pull back from one year to the next, this is what Apple does. Every few years, they pull back, they seem to build some momentum, and then they take off again, largely driven by the new products that they come out with. We've already seen that. Okay, now let's jump over to the dividends. And this is really coming off of their recent earnings call where they had a couple relatively decent announcements. So this is the history, their dividend paying history. How much money have they paid out in dividends? Most recent numbers about $15 billion in dividends. And we can see, again, big picture, they are increasing how much they're paying out in dividends each year. Now, if we're curious to see this on a per share basis, Or we can jump over to the dividend section of our website and we can see that every 4 quarters, Apple has consistently increased their dividends. This chart goes back to 2014, but they've been doing that since 2012 is when they really started paying dividends. But that brings us over to the more interesting and semi exciting news with Apple stock coming out of the most recent earnings calls. And that is what they are calling their repurchase of common stock. You might hear it's called stock buyback program. But basically, the big news that came out of it is Apple authorized a giant leap in their stock buyback program. They paid last year, they bought back about $77 billion worth of stock. After coming out of the most recent earnings call, they announced that they can buy back up to $110 billion worth of stock in the open market. If you're curious to see how that would look on a chart like this, well, we can see that the most recent authorized amount is a pretty big jump up relative to recent numbers. Now, I do think it's important to point out that that doesn't necessarily mean that they will buy back $110 billion worth of stock, but Apple has a ton of cash, and clearly they have a history of buying back stock. So the fact that they are now authorized to buy $110 billion worth of stock is a really good thing for Apple stock. Now, ultimately, this would impact things because this would decrease the number of shares outstanding. And we jump over to the chart for the weighted average shares outstanding. So this is coming off of their financial statements on an annual basis. We can see that clearly the trend has gradually slid these numbers down. But with the new $110 billion authorization, it's likely that this number is just going to continue to fall from here. And that should help the per share value for all the individual stocks. That being said, let's jump over to the free cash flow numbers so we can try to come up with the fair value of Apple stock. So we can see here that we have 3 years of analyst estimates. This is the default that we're using on the website. And we can see how many analysts we have for each year and what their numbers are. They have free cash flow climbing up to in 3 years' time to 120 or so billion dollars in free cash flow. Given their recent numbers, this is by no means a stretch. And then when we jump over to the fair value calculator to see what the Apple stock could actually be worth, well, we can see current price about $190 a share, fair value coming in at $118 per share. Now you might look at that and say, well, that looks fairly conservative. And it is true. Our assumption is that we grow out those free cash flow numbers for 3 years. And then from there on out, it grows at 2.5%, which is, by the way, the settings that we're using. That's our perpetual growth rate. But what if those numbers are a bit too conservative? I think a lot of these companies, especially the Magnificent Seven, it makes sense to extend that out to a longer period of time. So if instead of going out just 3 years, if we were to go back to our discounted cash flow calculator and extend the time period out 10 years, by the way, the green bars are analyst estimates, the blue bars are calculated numbers. So now we can see what the numbers would actually be if we were to extend this out 10 years. Now, one of the ways that this calculation is done is we take the growth rate, we take the 10-year average growth rate, and then we grow it out. We grow out the free cash flow numbers off of the most recent analyst numbers. In this case, we actually happen to have a 4th year of analyst estimates for free cash flow, and then we grow it out. But the trick is that we don't just grow it out by the 10-year average. We, in fact, want the growth rate to gradually decline. That is what prevents it from getting too aggressive. So we can see the green numbers up here. It goes 14%, 12%, 10%, and gradually stair steps its way down until after this entire time period, well, the growth rate would be our perpetual growth rate, in this case, of 2.5%. So with these new numbers, when we jump back to the discounted cash flow calculator, well, we can see that the stock is now, the fair value for Apple stock is still about $176 per share. By the way, that $176 is after accounting for cash and debt. You take the cash, subtract the debt, offset those numbers. The 176 is accounting for the fact that they have a few dollars per share in net cash. They have more cash than they have debt. Now, if everything I just went through on that chart was kind of just a lot going on, you don't really care, you're just curious, is it a buy or is it a sell? Well, the way you can tell with this is you're looking at the needle. Where is the needle pointing? Basically, if the needle is to the left of the center line, the stock could be undervalued. If it's to the right, could be overvalued. Ideally, we research undervalued companies. We don't necessarily have to waste our time researching overvalued companies. Now, since I've gone through this analysis and I actually own Apple stock, I bought my shares at about 140 bucks a share. Well, for me, I'd like to see Apple stock pull back a bit, at least below this fair value. I'd like to see a 5% or so margin of safety below the 176. That would make me feel a little bit better. 10% margin of safety would be even better. So I'd like to see Apple stock pull back a bit if I'm going to add to my current position. But in the meantime, I'm more than happy to just sit and hold my current position. And as I mentioned at the start of this video is the first video in our 7-part series. The rest of these companies will be analyzed fairly soon. We'll be releasing those soon. If you'd like to get access to the website we're using throughout this video, link in the description below. And thank you so much for sticking with me all the way to the end of the video. I really do appreciate it. Thank you, and I'll see you in the next video.